Hi everyone, good to have you in class today. My name is Chinedu. This is A Plus Academic Resource Center where we take online tutorials for undergraduates and senior secondary students, okay? Alright, today we'll be looking at trial balance, and we're going to be looking at the difference between trade discount and cash discount. Remember in our previous lessons we discussed what a journal proper is, and we analyzed and in-depth what the journal proper can be used for. Okay, so we are moving on now to understand what trial balance is and what trade discount and cash discount is. Remember I told you, when we begin to solve practical examples, all these parameters will be very important. They will come in handy. You will see them. That's why I'm trying to lay foundations upon on these concepts for you to understand them and know how they are being applied. Okay, all right, seats are tight, fasten your seatbelt. Let's get into work. Okay, now what is a trial balance? A trial balance is simply the list of balances extracted from the ledgers, the various ledgers, both the personal ledger, the sales ledger, and what have you. The list of balances extracted from those ledgers to test the arithmetic accuracy of bookkeeping of those entries. Now, what we're trying to say is this: a trial balance. Okay, maybe when we begin to solve final account of a sole trader, you understand where the trial balance comes in. Okay, now, but before that, I need you to understand what the trial balance. Just get a view, maybe a short view of it, what the trial balance is. So maybe when we begin to solve final accounts of sole trader, you understand better. Now here is it. A trial balance is a list of balances extracted from those ledgers, the final accounts from the final balances of those ledgers. When we enter them to check the arithmetic accuracy, to check our entries, to check the arithmetic accuracy of those balances. Now, how do we check if those entries, those balances extracted from those ledgers are correct? Number one, the credit side of the trial balance must be equal to the debit side of the trial balance. Hello? The credit side of the trial balance must be equal to the debit side, with the debit side of the trial balance. So let's say on the debit side, this is a typical format of the trial balance: debits, credits, particulars. Okay, this is a typical format of the trial balance. So all the debit balances all the ledgers that has debit balances, will pick those balances and put them here. All the ledgers that has credit balances, will pick them and put them here. Then by the time we add this up and add this up, we should have the same figure. Now, in a situation where we don't have the same figure, maybe this one is more than this, the debit side is more than the credit side. That means there's an error somewhere in our posting or our entries. Hello, are you following? If this side, the both side doesn't agree, if they are not equal, that means there's an error somewhere, either from our posting or from our balances. Okay, so that is what trial balance helps us to do. So fundamentally, trial balance does two functions. First, it helps us to test the arithmetic accuracy of our balances, of our entries. Then secondly, it is the basis upon which final accounts are being drawn. Okay, but we'll see that when we start solving for final account of a sole trader. Okay, now, however, your entries in the ledgers or your final balances from the ledgers can be wrong, and your trial balance will still have the same figure, will still balance. Your trial balance can balance, and your entries or your balances from the ledgers can be wrong. Okay, now when those errors occur, now those errors are errors that cannot affect the trial balance. Okay, these are errors that cannot affect the trial balance. Let's have a few of them. Number one, we have error of commission, error of commission, error of omission. We have error of omission. Sorry. We have error of original entry, error of original entry, we have about 6 of them. Error of complete reversal, error of principal, error of there are 6 of them. Error of commission, omission, original entry, complete reversal, error of principal, and I think transposition error. Okay, transposition error. So these are errors that may not affect the trial balance, but they must have been committed in the ledgers or during posting of our entries. Okay, now that's that about trial balance. So these errors will not affect the trial balance. Your trial balance can still balance, and these errors will be committed. We are going to look at these errors in details when we start solving what's it called? When we start treating errors. Okay, when we start treating errors. All right, that's that about trial balance. Okay, what else? Okay, that's that about trial balance. So if you have any questions, ask me in the comment section. Don't forget, I said all these errors, we're going to treat them in detail when we start doing correction of errors. It's a subject on its own. So we are going to see them in details and talk about them very well. All right, so for debit and credit, we have, for debit, we have assets and expense. Then for credit, we have liabilities and gain or income. Okay, these are balances that comes in on the debit side and balances that comes on the credit side. When we do final account of a sole trader, you will understand better. Okay, all right, so that's that about trial balance. Now trade discounts versus cash discount. Okay, now trade discount, what are trade discounts? Trade discounts are discount given to customers that buy in large quantities. Okay, that buy in large quantities just to persuade them or to convince them to buy more. For instance, if I have a customer that comes and say, I want to buy 500 cartons of Indomie, for instance, I'll say, okay, sir, I'm going to give you 10% discounts. It's just to encourage the consumer or the customer, to encourage the customer to purchase more. And most of the times, trade discounts are mostly done on credit basis, credit transactions. You must be a customer that buys in large quantities before you can be granted that privilege. So trade discounts are discounts given to customers who buy in large quantities to encourage them or persuade them to buy more. And most times they are being done on credit transaction, large quantities of goods bought on credit and all that. Then cash discounts, discount given to debtors to help to encourage them to pay their debts on time. For instance, if I have a debtor owing me 50,000 naira, and maybe he has owed me that money for like 3 months, and I say, come, Mr. Ike, I'm going to give you 5% discount if you can pay me my money between now and so time. Between now and so time. If he's able to pay that money between that time, he will enjoy that 5% discount. Okay, so basically cash discount is just to encourage debtors to pay their debts, not really for the fact that they are buying something. Okay, so these are the slightly difference between the cash discount and the trade discount. However, a customer can enjoy both discounts. He enjoys trade discounts when he buys in large quantities, probably on credit, and enjoy cash discount when he pays off the debt. Okay, so he can enjoy both discounts. Now, how do we treat trade discount and cash discount? Now, I need you to listen attentively. Now, trade discounts, when a customer is giving a trade discount, it's the net value that is being recorded on double entry basis. The discount itself is not brought into the double entry transaction or basis. It is only the net value. For instance, if the goods is worth 20,000 naira and it's giving a trade discount of 10%. 10% of 20,000 is 2,000. Okay, so 18,000, it's what we're going to be working with. We have no business with 2,000. However, 2,000 is going to appear in the invoice, of course. The net value, the gross value, the trade discounts, and the net value, they are going to appear on the invoice. Okay, but when we are moving to our various source documents for a double entry basis, we are only going to work with the net value, which is 18,000. But for cash discounts, both the cash discount, the gross value, and the net value are all going to be carried in to the various subsidiary books, and the double entry basis is going to work on them. Okay, now for cash discount, let's say the same scenario, someone owing us 20,000, and we ask him to pay, if he can pay his debt between so time and so time, it's going to enjoy percent discounts, let's say 10%. Okay, now this 10% is 2,000, so 18,000, we are simply telling him, see, if you can pay this 18,000, if you can pay this 18,000 within so time, you're going to enjoy 2,000 naira discount. However, you are owing us 20,000, but if you can pay between so time, you enjoy this discount. Okay, so now this gross value, the discount, and the net value are all coming into the source document, unlike the trade discount where we only work with the net value. Okay, now this 2,000 naira is the discount allowed. Discount allowed. Okay, now remember when we did a cash book, if you check the format of the cash book, we have the section for 3-column cash book. The section for discount allowed is on the debit side. The section for discount allowed is on the debit side. That is where this amount comes in. Okay, now so basically we're going to have discount allowed account. We're going to have the debtors account as well. Okay, while this place we're going to have the debtors account and the creditors account. Okay, or the purchase account. Yeah, we're going to have the purchase account and the debtors account or creditors account, depending on whose book we are recording. If you're recording on the seller's account, so we're going to have the sales ledger and the cash book. We're going to have the cash book and the sales ledger. Okay, but if you're working in the books of the buyer now, we're going to have the purchase account and the cash book. Okay, so these are the slight differences between the cash discount and the trade discount. Don't forget, the trade discount is given to those buying in large quantities, sometimes on credits. If you're buying on credit in large quantities, you will enjoy the trade discount, while the cash discount are given to debtors to encourage them to pay up their debts. Okay, but a customer can actually enjoy both. He can enjoy trade discount when he buys in large quantities, maybe on credit, and enjoy the cash discount when he's been encouraged to pay up his debts. Okay, all right, so these are the differences between cash discount and trade discount. We're going to look at it properly when we start doing final account of a sole trader. I'm just taking out time to give you the fundamentals, how they are being treated or how they appear in the various source documents and subsidiary books. Okay, all right, thank you very much for staying. If you have any question, please use the comment section. I will be more than glad to answer you. Don't forget to subscribe if you haven't done so. Like our page, encourage us. When you do things like this, it encourages us to do more. Just like I told you, we are committed. We are intentional about what we're doing. We are not just doing this to pass away time or whatever reason. We just want you to be better academically. We have come to understand that students struggle most times with various courses in social sciences and management sciences. So we have taken out our time to address some of these concerns and help you understand better what you need to do. All right, thank you for your time. God bless.